The GOAT, the greatest investor of all time, Nancy Pelosi, does it again. You've probably only heard about Tempus AI because of Nancy Pelosi. A couple of days before, I didn't even know that this company was, real, was a thing. But yesterday, this stock was up 35.53%, and right now, before the market opens, it's up another 7.8%. It now has a market cap of $7.5 billion. Now, why is that? Well, that's because Nancy Pelosi bought Tempus AI options on January 14. Apparently, the options are as follows: 50 call options with a strike price of $20 and an expiration date of 16 January 2026. The amount is between $50,000 and $100,000. And so, yes, apparently the Nancy Pelosi trade is a real thing. So let's discuss actually what this company does, because maybe it is a good company to look into, right? So let's do that. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So first of all, if we look at the average analyst price target, there are 10 analysts covering this company, and the average analyst price target sits 19.4% higher than the price we're at today. This is a company that went public a year ago, and it's only up right now 18.36%. This is a company that currently is unprofitable, but revenue-wise, it is growing quite quickly and is expected to grow quite quickly in the next coming fiscal years. And by the way, revenue for fiscal 2024 is expected to be closer to $700 million, which would represent around 32% year-over-year growth, according to management's guidance. Now, what does this company actually do? Well, in short, it's basically a platform that is supposed to help doctors, patients. So imagine you have a huge library of books. It's always the same example that I use when I try to explain these types of platforms and AI systems. So you have a library full of books about different people's health. Tempus system basically reads those books and uses their AI, their algorithms, to help doctors understand what might be the best way to help each person get better. So here again, we're talking about personalized care. We've talked about personalized care when talking about HIMSS, when talking about, believe it or not, Teladoc as well. So here we have another company trying to do that. They also look at things like what kind of sickness a person has, what medicine works for others with similar problems, and how doctors can use this information to make the best choices for each patient. And of course, data here is of extreme importance. They show us this slide right here. They are connected to over 65% of all academic medical centers, and over 50% of oncologists in the United States are connected through their sequencing and data collection efforts. As a result, they have over 200 petabytes of rich multimodal healthcare data. And in the age of generative AI and all this AI talk, it's very, very important to have proprietary data. Here they talk about how their 3 product lines are integrated and benefit from network effects, which allows them to invest in the platform in a sustainable way. So they say here, each of our businesses is integrated with the others, reinforcing their impact in the market. The more patients we sequence, the more data we collect, which allows us to provide additional insights, further enhancing our genomics business and adding more data, which compounds the value of our data and AI business. And so over the last couple of years, of course, revenue has increased quite rapidly. We've seen the growth rates for the next coming fiscal years. Free cash flow wise, they're expecting to be free cash flow positive by fiscal 2026, but they're also making an acquisition, which we're going to talk about in just a second, which might accelerate that. Currently, how does Tempus AI generate revenue, or where does that generally come from? Well, data and services revenue, and then genomics revenue, which is the orange one here, which is the biggest chunk right now, but growth there is decelerating a little bit. Data and services is smaller, but you can see right here, last quarter, that is accelerating quite rapidly. That did grow 64.4% year over year. If we look at the cost of revenue to grow those segments, we can see that for genomics, we've seen they grow that 20.2% year over year last quarter, but the cost of growing that by 20.2% year over year has increased 29.2%. As for data and services, much better. Here, the cost of revenue for data and services did decrease by 3.4%. We've seen that technology research and development was up 27.8% year over year, R&D up 17.71%, SG&A up 42%, and so overall total cost and operating expenses did increase 29.7% year over year, slower than total revenue, but all in all, they did see net loss increase 42% year over year. It was also including, I think, $22 million, a one-time thing with regards to compensation. The company also announced the national launch of Olivia, their AI-enabled personal health concierge app for patients. So they said that the patients can connect directly to over 1,000 health systems through economic health record integration, sync data from health devices to track daily metrics, or manually upload health records. Olivia also connects to external resources such as clinicaltrials.gov to supplement the personalized insights offered from existing health data. So what do you get here? We get a smart profile summary, AI-enabled note taker, medical image sharing, health monitoring, and direct data import. So overall, zooming out a little bit, looking at gross profit margin, we can see that gross profit margin has increased. We're now in the 50% range. A couple of years ago, that was actually in the 20-30% range. So some good improvements there, especially in the last couple of quarters. Then with regards to the acquisition of Ambry Genetics, they basically think that this will expand their capability and market presence in the genetic testing sector, particularly in areas like hereditary cancer screening. So they thought the acquisition made sense. These are the terms of the acquisition, $600 million in total consideration. The multiples are as follows: around 1.9 times calendar year 2024 revenue, which is just above $300 million, 15 times calendar year 2024 EBITDA, which is above $40 million. And they said here that Ambry revenue currently is growing at over 25% per year. So yeah, they paid a premium, but I don't think it's such a crazy premium to pay. They also expect to close this acquisition by Q1 2025. They also provided us guidance for Tempus AI and then Tempus AI plus Ambry, so with the acquisition. So without the acquisition, they expect revenue of around $700 million, which would increase 32% year over year for the fiscal year 2024, and adjusted EBITDA loss here of $105 million, but that's a $50 million improvement over 2023. Including the acquisition, so including Ambry Genetics, they expect revenue to be around $1 billion, so that would increase 30% year over year, and adjusted EBITDA a loss here, but much better, $65 million, and that's a $90 million improvement over 2023. So all in all, what do you think? Do you think this is still a worthy investment, even if it already got the Nancy Pelosi pump? What do you think? I think the business is quite interesting. This is a company that is definitely growing quite quickly. Do they have a huge moat? Remains to be seen. I'll have to dive a little bit deeper. But the fact that they have so much data, the fact that they are integrated in so many systems, I think that provides already a moat, because at the end of the day, useful data is what's going to win here, especially in this field. Is it worth paying the price right now? I believe here EV to sales for the next 12 months is 8.5 times. HIMSS is 3.1 times. I know it's not exactly the same business. I'm just giving you here a couple of comparisons. 3.1 times, and of course profitable today. So what do you think? Let me know down in the comment section below. I will continue to follow it on the sidelines. I have no intentions of buying this company, but it is interesting. It is interesting to see. And just because it already got the Pelosi pump does not mean that it should be disregarded just yet. I think the growth rates are there. I think the roadmap is there. The opportunity is there as well. So quite interesting. Should have thought about that before, but then again, didn't even know this company existed until I saw the Nancy Pelosi news. So there you have it. Anyways, share your thoughts down in the comment section below. Like, subscribe, all of that, and I'll see you all in the next one. Bye-bye.